What if they actually bought $55 billion worth of Bitcoin? Now think about that for a second. Like, if they even bought $10 billion worth of Bitcoin and they announced that to the marketplace, Bitcoin would triple. They would have $30 billion of property. It would be going up 20 to 30% a year. So within a few years, they'd have $100 billion of property. If they actually executed the $50 billion buy, you would have $150 billion worth of property within 24 months. And that $150 billion would be accreting at 20 to 30% a year. But let's just say 20% a year. You're going to generate $30 billion of investment income per year, compounding. And so now you end up with a company where the balance sheet is worth hundreds of billions of dollars, not just the P&L. And so most of these companies, they don't have property, so they're valued on cash flows. And that means as a store of value this decade, that's increasingly risky, right? It's probably the best conventional idea anybody has, but you know, having the best conventional idea is, you know, it's like buying the best building in a war zone. It's like, okay, well, it's the best you could do, but you're still losing. Or it's like, it's finding the most comfortable cabin on the Titanic. The ship is sinking. You have the presidential suite. Good for you. Now, I think that's hyperbolic in this case. I don't think the Magnificent Seven are sinking, but I think that when you're stuck in a certain frame of reference, there are just various degrees of mediocre outcome. There isn't winning. In order to win or get an excellent outcome, you have to think outside the box, and that means if you're in a war zone, you got to leave. If you're buying currencies that are denominated in a collapsing currency, you know, whether it's a peso or a lira or a naira or whatever, you got to get out of that currency. If you're buying currency derivatives denominated in dollars, forward discounted, and you know the dollar is going to be inflated at 7-8% a year, well, that's your hurdle rate. You're going to have to grow your cash flows faster than 8% a year. Now, how many companies can grow their cash flows 15% a year for the next 20 years? Okay, now you might find some. Now the question is, can you protect them against politicians, foreign and domestic? Right? If your local politicians like you, will the foreign politicians like you, or vice versa? So those kind of investments, they're very fragile, and I think you got to be aware of them. And so I guess that's why I did what I did a decade ago. It paid off really well, but when 2020 came, the entire world changed, and the question is, what's the next thing? Yeah, Bitcoin's the next thing, but Bitcoin is like, I've said it before, it's kind of like Apple or Google in 2010, misunderstood, everybody needs them, nobody can stop them, but it's a bit better because Bitcoin is an asset class, and so its target use case is store of value for the civilization, which means that there's no reason why it doesn't subsume gold, and gold's worth 10 trillion as a store of value. Why can't it subsume real estate at 100 trillion? Why can't it subsume all store of value property, which gets you to 200, 300, 400 trillion? And the more valuable it gets, the more useful it gets, right? The fundamental big idea, and it's very difficult to explain this to people, but if Bitcoin increases in value by a factor of 100 because people buy it as a store of value, it's 100 times more valuable. Whereas if Apple stock is 100 times higher priced, the cash flows in the next 20 years have to keep up, right? And people that criticize Bitcoin, they say, well, it's got no cash flows. Well, that's not the defect, that's the feature. It's not a liability. It's the fact that it's something that is not valued on cash flows means it's never going to miss its quarterly cash flow expectations, right? In fact, it's a reflection of the cash flows that have flowed into it. And so Bitcoin is just a much more powerful idea. It's the digital transformation of capital, right? It's not digital information, it's digital energy, right? And energy is matter, energy is capital, energy is property, right? And so Bitcoin is digital energy. Google and Apple and Amazon, they were all about digital transformation of information. And I think that was the 30 years. It was a 30-year trend. I just think we're kicking off another 30-year cycle. And Bitcoin is this big driver of this digital transformation of energy. I use the word energy because energy is conservative, right? It can neither be destroyed nor created. There's conservation of energy, just like capital, right? I send you $1 billion, you get the billion, I don't have the billion, right? Whereas when I send you my record collection, you've got the records, I've still got the records. You see? I send you my photographs, you've got the photos, I've got the photos. So information is non-conservative, energy is conservative. Bitcoin represents the digital transformation of capital, right? Most people don't agree. Most people don't even understand, right? Right, the beauty of this is it's not that they understand and they disagree. It's like you say Bitcoin is digital energy, and even the people in the crypto space will disagree with me. They're like, what do you mean? No, it isn't. It can't be. Like, that's not what it is. They don't get it, right? And so that's a paradigm shift so profound that you can say it in front of someone, and unless you have 100 hours to show them 100 examples and it can conduct a Socratic tutorial for them and answer their 100 questions and show them 3-dimensional visualizations and then make 100 connections. If you don't have that time, they just look at you, they blank, they disagree, they misunderstand, and so they don't buy. But that's exactly what you want. You want something which can't be stopped. The fact they don't agree and they don't understand doesn't mean it's stoppable. Any more than I start a fire in Chicago and it's burning. It's like, you might not understand there's a fire. You might not know fire. You might wish there isn't a fire, but the fire's coming, right? It's not stoppable, right? It's a chain reaction. And this is a chain reaction right now. That's what makes it, I think, such a compelling proposition.
Amazing. And yeah, I think the mobile wave bet that you made in 2011 should be known by more investors because there's so many parallels between it. And I think it's just amazing that it's not your first rodeo and you've done it all before. Now, something I wanted to relate back to, you mentioned Warren Buffett, and we were talking about diversification and how that's people don't get rich. We write to 50,000 people on our email list every day, and the most common question we always get is, am I too late to Bitcoin? And you mentioned when Warren Buffett, his best trade was buying Apple, and he was 20 years late to it. So big pushback we get is the cost of living has gone up so much, wages and people's salaries haven't increased at the same pace. And at this point, it's impossible for some people to accumulate one whole Bitcoin, and even to get to 0.1 Bitcoin is a stretch at this point. What would be your response to people that think they're too late to Bitcoin, or that they're too late to the party? They see it at 50,000 and they think that the boat has left the port and they're too late.
I think the risk-reward proposition for Bitcoin in the year 2024 is better than any other time in the history of the asset because you have institutional adoption, you have regulatory clarity, you see capital coming into the space, and yet still you can do the survey yourself. Ask 100 of your friends if they're fully invested in Bitcoin and if they understand it. And if 95 say no, right, I would say do your own research. But Bitcoin's 15 years old, so let's look at other great investments. 15 years after Manhattan was founded, was it a good investment? We could start 200 years after Manhattan was founded. In 1776, roll the clock forward, 1791. Was it a good investment? And was real estate in Manhattan in 1791 a good investment? Was it a good investment in 1865 after the Civil War? Was it a good investment in 1970? Was it a good investment 15 years afterwards in 1995? Was it a good investment in London 20 years ago? Like 2,000 years after the Romans showed up in London, was it a good investment to buy London property? Right? I mean, these are scarce, desirable properties, right? It's 15 years late is not late, right? That the difference between the winners and the losers is the winners buy something valuable and the losers are afraid, right? The losers are afraid to buy the valuable thing because it's too expensive. New York real estate was the most expensive real estate in the United States 300 years late, right? It's always been the most expensive. Apple Computer was founded, I think, 1976, around then. 15 years after Apple Computer was founded, was it a good investment, right? Check the price of Apple stock in 1993 or 1996. I think in 1998, Michael Dell told the board they should shut it down, give the money back to the shareholders. But the truth is, at many points in time, it was a good investment. I think, as I said, the real key is to understand what is Bitcoin's use case. It's digital capital. Well, how big is that? $400 trillion? Right? How much capital is locked up in real estate, equity, currency, bonds, collectibles, trophy assets, precious metals in the year 2024? Right? It is probably half the value of most residential real estate is the monetary premium. It's the capital. So, like, how do you know this? I give you a little test. Go to Miami Beach, go up and down the beach, and then count the number of lights on in a condo building on the beach. Or go to Monaco and count the number of lights on. And what you'll find is that 80 to 90% of all of the condos don't have lights on at night. So people have huge amounts of capital tied up in these idle assets. And there's a lot of reasons for them, but one reason is because they feel like their money is safer there. So in the 20th century, people basically bought sports teams. Ask yourself, what do rich people own when they get rich? They bought sports teams, they bought real estate, they bought companies, they bought land, they bought timber rights, they bought oil rights, they bought gold, they bought, bonds. They just bought stuff. Why? Because they knew if they left their money in the bank, it was going to dwindle away. Buy anything. They buy Picassos, they buy art, right? They buy stuff. So there was never a perfect digital capital. There was never a digital instrument where I could, like, if you were a rich Russian and you had a choice between buying a bunch of real estate in Moscow or buying Bitcoin, well, with ex post facto hindsight, looking back for the last 30 years, okay, now let's play that out, and you're a rich Nigerian. Now you're a rich, Turk. Now you're rich in Lebanon, right? And we don't have to be rich. Anybody with any amount of money anywhere in the world, right? You've got the last 100 years of history. You live in Germany in 1930. What do you want, a building or Bitcoin? You live in Argentina. What do you want? You want to own land? You want to own a building? You want a company? You want Bitcoin? The currency is going to collapse 5 times in 140 years. 5 times, right? Okay, so this is why we want to study history. If you study history, you're going to find that the currency collapsed thousands of times. In fact, on average, it collapses everywhere. It collapses everywhere on average every 50 years in the history of the world. And that's maybe me being charitable. So, is it too late? Well, can you actually take all of your property, put it in your pocket, and leave the country on one-day notice if you need to? If not, then you're probably not too late. Right? So if you go through that exercise, you can't take your building with you. You can't take your bars of gold with you. You can't take your stock shares with you. People for a while, they bought paintings thinking I'll roll them up, but it might not be easy to, and the average person can't buy Picassos. They're not quite exactly at the price point. How do you buy $237 a Picasso a week, right? So Bitcoin represents digital property. What's the value of digital property? Hundreds of trillions of dollars. Is it overvalued? Not yet. It's $1 trillion right now. So when it's 100 times more valuable than it is right now, will it be overvalued? not likely. It's probably still going to be appreciating faster than every other thing you can buy. Why? Because it's better than every other thing you can buy. Show me a hotel you can put in your pocket and teleport. Right? $1 billion of gold is like 3,000 pounds, right? How are you going to move that, right? Right? Give me a company that's going to last through the next 3 CEOs, right? Do you know who the 3rd CEO will be after the one that runs the company now? And do you trust that person? Right? The S&P 500, haven't we established there's a 99% failure rate? These are the winners. There's a 99% failure rate to generate shareholder value amongst the 500 best companies in the world. Now, if there's a 99% failure rate amongst the 500 best companies in the world, then what's the failure rate amongst the 100 million companies in the world? And, you know, and what's the most successful nation state currency in the history of the world? Well, if it's the dollar's lost 99.8% of its value in 100 years. Maybe 99.9% of its value. You could debate whether it's 99.8 or 99.9% of its value. Every other currency in every other country lost 100%. So, if you're sitting around wondering, is Bitcoin overvalued? The question is, overvalued versus what? Right? You're going to buy something, right? You're owning something in lieu of Bitcoin. What is that something which is better? Right? That's the real question. Because not selling is buying, but not buying is selling, right? And you basically got a certain amount of economic energy. It's deployed somewhere, right? And the question is, what are you invested in that you think is better? I think everybody's got to answer that question themselves, but you know, like if you owned a football team, like what's the odds that people are still going to watch football in 250 years? And what's the odds that you can put the football team in your pocket and leave the country? Not high, right? I mean, and what's the odds that, you know, you get attacked by, what if there's some law that says that you're liable for the physical damage and the emotional harm to the football players? And, you know, if someone gets hurt playing football, you have to pay $100 million settlement, right? That happens. Or even better would be, what happens if someone goes to a football game, watches it, and is traumatized by all the violence, and they form a class action lawsuit and they sue you? Mightn't that happen? Happens all the time. Right? Look at the history of opioids. Look at the history of cigarettes. Look at what's going on right now at congressional hearings around social media. At some point, you'll have trial attorneys suing tech companies because someone used a website and something bad happened to them, right? So there are a lot of risks no matter what you invest in. If you think you don't have risk, you're simply ignorant of the risks you're currently embracing. And I think that once someone understands fully all their range of risk, then your conclusion is, no, it's not too late to buy Bitcoin.
Amazing. And right at the beginning there, you said in 2024, you don't think Bitcoin has ever represented a better risk to reward ratio. Looking out in 2024, like it seems like we have this insane confluence of factors. ETFs launched at the beginning of the year. In April, we have the halving. Correct me if I'm wrong, we have the FASB accounting rules go into effect this year. Then we have the election in November, so it normally means more liquidity. What is your general outlook for 2024? Do you think this is just going to be a complete watershed year for Bitcoin because of this confluence of all these things coming together?
I think this is going to be a good year for Bitcoin. I think we started out the year with the ETF approval, and that was a big milestone. I think that the success of the ETFs is another milestone. I think that the halving in April will be a third positive milestone. I think those three things are going to drive momentum, and I think all the marketing wars between the Wall Street firms is going to be positive, and I think the assets being normalized throughout the mainstream investment community, and so I think it will keep generating momentum from here. I think it's also worthwhile, I think, to make one point. I think that we're living through the Bitcoin gold rush era. And I think the Bitcoin gold rush era started January 2024. And I think it runs until around November 2034. So it's about 10 years. And I'll tell you why.